Hello everyone, let's have a look at the market snapshot for today. The Indian markets have become really good, I would say. Friday followed by a Monday, pretty good advances. The markets are looking good. The only thing would be if at all they can sustain the levels, that is going to be very, very crucial. Let's look at the numbers. The participation, the advances were close to 380 against declines of 100, The leadership new highs not getting formed, but that's okay. It slowly, gradually, it should be. If it just happens out of blue, it won't sustain. So pretty okay there too. We got around 910 new highs against 490 odd new lows. The breadth is improving plus sustaining, which is a very, very good part. Like above 20 MA, we got just over 300 stocks today. Above 50 MA, close to 300 stocks, and then above 200, almost 280 stocks. So pretty good going for India. The only thing required would be this needs to sustain. If it doesn't, then all of this becomes just a random theory. But then if at all these levels can just sustain, it will become pretty good for the Indian markets. If you look at the charts, if you that's a 50 EMA, Nifty has just crossed the Nifty 50. So if you look at it, the trend looks pretty much downward itself, right? The thing is, what I would prefer is that Nifty should hover around something around these levels and then breaks out. That is what will be needed for this to sustain. But not a bad start to the week for sure. This is Nifty 500. This is looking much better than the Nifty. If you look, I mean, these levels have been tested quite a few times, and now it has given a breakaway gap. These breakaway gaps are pretty much stronger gaps, but the only thing required would be, again, this too needs to hover around these levels and sustain. That is what will build the momentum in the markets. The trend Nifty 50 remains bullish just because it is above 50 MA, but I'll be cautious trading for Nifty 50. The participation is strong, the breadth remains mixed. For 500 it is bullish with trading above 50 MA. Participation is strong, breadth is strong. Amongst the two for sure, Nifty 500 is a go-to indices for me. That is where I would want to place my bets. US participation pretty good. The Friday was very, very good. This data is for Friday. S&P 500 closed almost at 400 advances, declines of around 100. A new highs 25 against declines of 475. Good going there too. The breadth above 20 MA, almost 350 stocks, followed by 50 MA, around 300 stocks, then above 200 EMA, 300 stocks. Pretty good markets, I would say. If you look at these levels, how beautifully the markets have respected the 50 EMA, and from that is where they showed the bounce. If you look at SPN, Nifty, S&P 500, same thing. Again, it respected the 500 EMA, 50 EMA, and the markets have been bullish thereafter. And this is for Russell 2000, again respected 50 EMA and going ahead. If we look at the indices, Nasdaq looks bullish, trading above 50 MA. The participation is strong, the breadth is neutral. This is, I think, is one of the biggest indicators from the market. Everything looks strong, but the breadth is not. S&P 500 bullish, trading above 50 EMA, participation is strong, breadth is strong. Russell 2000 bullish, trading above 50 EMA, participation is strong, breadth is strong. So pretty good going for the US markets, but honestly I'll be a little cautious because I think Nasdaq is the first indicator which is showing that breadth is not supporting, and I think it will be followed up in coming few days, few weeks in S&P 500 and Russell 2000. So I'll be a little cautious about the US markets for sure. The macro dashboard, 10-year yields rising, around $4.5 rising, VIX around sub 20 levels, BTC is bearish, gold is bearish. So basically, if I just leave VIX from here, the other four indicators are pointing that the rise in US markets is not sustainable. see, the thing is, the equities and yields cannot be rising together. Basically, uh, yields rise when investors starts looking for safer options in the market. Dollar tightens the liquidity in the market. BTC bearish indicates that investors are not in a mood to take risky bets. Gold is bearish. That means again investors are looking for even safer options, and the safest option remains the US yields. So these four indicators are clearly pointing out that whatever is happening in the US market might not remain sustainable. I'm not predicting it. I'm just saying, basis this data, that rise does not sustain. So I'll be very, very cautious about the US markets. Uh, Again, the scoreboard remains on the data front. It remains, India remains mixed. US looks strong and macro neutral. But as I said, for US, I will be cautious because data points. See, the thing is, data will not collapse. It will take its own time, to start showing results. So that is the reason I would respect what the data is saying, and that's the reason I have mentioned US to be strong market. But at the same time, like, the four indicators are diverging from that rise, and that's the reason I'll be cautious about the US markets. The takeaway from the markets would be India strong recovery, breadth participation improving significantly. It needs to sustain. US closed the week really strong, but I'll be very cautious. That's what I reiterated many, many times. Dollar and elevated yields continue to pressure risky assets. That is what I am saying. Bitcoin remains weak, suggesting risk appetite is still subdued. And VIX around 17, that's a typo, indicating no signs of panic. So I would say pretty healthy, strong week overall. I'll be cautious about the US markets, and I would want the Indian markets to sustain. So I'm still not going all in. I'll take my conservative bets in S&P 500 and Russell 2000 for the US markets, and S&P 500 for the Indian markets. There's no point to be very aggressive at this point of time. Yeah, that's everything from my side. Hope you all found this to be useful. Thank you so much, and see you next time.